Hello there. Welcome back to EBM Info. Today we want to look at a question from a past exam question paper. This is November 2022, and we are going to look at 4.6. That's where we are going to look at, and this topic is on cash flow statement. Still working on cash flow statement. So this one is a different version of a cash flow statement from the first video that we received from this channel. So we are going to go through this question, then we answer the questions that follow. So we are on 4.6 of that question paper, and the question reads: Jabu owns a small clothing shop in his area. Use the following information to draw up his estimated cash flow statement for the next 3 months. At the end of June 2020, you get a favorable bank balance of 8,500. So very important. There's a balance that we are going to start with. It's going to be this one, 8,500, and remember, it's a favorable one. When it's a favorable, we're going to indicate 8,500 as a positive figure. And when it's unfavorable, we are supposed to put it in brackets so that it's a negative figure because it's unfavorable. But in this instance, it's a favorable. So we're going to start with 8,500. The next sentence is saying he also qualified for a loan of 6,500, which was granted in July 2020. So it means in our cash flow statement in July, we are going to receive a loan of 6,500. So under receipts, we're going to put this one 6,500 for July only. That's when that loan is going to be received, right? Then we are given a table there of we have a column of months, then we've got estimated sales, then we've got estimated purchases. So we are going to use these figures to find, for instance, for estimated sales, we know that total sales is equal to cash sales plus credit sales. So we would want to see what proportion is cash sales. Then we just calculate there, multiply the proportion by the total. Then also find out about the credit sales. And we credit sales now, we would want to see when the sales are going to be received, depending on the when the customers are going to pay. So that's what we have there. Then on estimated purchases, we are going to also listen to the instruction and see what we are going to do there. Then under that, we also have other information that we are given there. So we are given a list there. You are seeing that that is a list of expenses. We've got telephone, water, electricity, wages and salaries, advertising costs, stationery, and rent. They are representing expenses. So these are going to be our payments. So you'd see that from here down, going down to rent here, they are representing our monthly payments. These are our monthly payments. And we are just going to add the total there. And the total that we are going to get there will be under monthly payments for all the months, because it's going to be fixed throughout the month or the period that we are given. Then beneath that, we have got a loan repayment. And the loan repayment is specifically starting in August. So it means this loan repayment is going to affect August and September, because that's when it's starting, August. So 850 is going to be for August and then September. Then beneath that, we have got an instruction that we are given there on item 2. That is here, it's getting 40% of all sales are on credit. And next sentence saying this consumers pay 30 days later. So here, this is where the explanation is in terms of cash sales and credit sales. Cash sales are the remainder, which means 40% are credit. So if we say 40%, which is the credit, then we add X, which you don't know, that is the cash sales. Now we get 100%. So to get our X, which is our cash sales, we are going to say 100 minus, if you make X example with the formula there, if subtract there, we get 60%. So it means our 60% is representing our cash sales. So our credit sales is 40, but our credit sales, the explanation again is there in front, which is saying these consumers pay 30 days later. So what does it mean? It means, for example, the total sales that we have for July, if you calculate the credit sales for July, they are going to be received in August, a month later. So we are going to indicate them as that according to the figures that we are given there. So for cash sales, we are going to use 60%, which is 0.6 as a decimal. Then for credit sales, we're going to use 40%, which is 0.4 as a decimal. Then we go down there to look at the next instruction that we are given. We are also given in terms of purchases on item 3, saying 10% of all purchases are on credit. So it means when 10% is on credit, it means we are also going to say 100 minus 10 to get our cash purchases, which is 90%. So we also multiply 90% as our credit and then 10% as our cash. So here we can just indicate here that our cash purchases is equals to, we are given this one as credit, so it's 90%. Then we have our credit. Our credit is given as it is. Credit purchases is equal to our 10%. So we are going to use those proportions. Then we also have some explanations that we are given there. Beneath that, we are going to go through that one, and then we finish up to 6. So what we are going to do, let's go to the answer section and see what the table that we have. This is the answer section. It's in the answer book. We've got the opening balance. So the balance that we are going to start with the year we are given in the question on July here, the opening balance. We go back to the question to check it. If you come here, you'll see that the balance is there at the beginning of the question. The favorable one that we were given, this one, favorable bank balance of 8,500 is the one that we are going to start with. And we said it's a favorable, so it's a positive. We are going to put it as a positive figure. But if it was unfavorable, we are going to put it as a negative. So we are going to go with 8,500 at the beginning of the period. We come here. So now we say here is 8,500. So we have 8,000, here 8,500. So that was what we have there. Then the next item is cash sale. We are given the item, so you can go item by item, try to enter what is supposed to be entered there. Then if you go down there, we have got an instruction that we are given there in terms of we can start with item 1. We go item by item. Item 1 is saying we have monthly payments, remember. So if you add 650 plus 1,250 plus 3,800 plus 1,700 plus 550 plus 1,900, the total that you are going to get there is 9,850. 9,850. So we have got 9,850 representing our monthly payment. So we are going to put this 9,850, and it's going to apply to all the 3 months that we are given in the answer book. So we are going to put that figure, 9,850. So it's on monthly payments here. You see, that's where we have got monthly payments. It's 9,850. So we are going to say 9,850. It is going to apply here again, 9,850. And you also have 9,850. So that's what we have. Then we go to the next item to check what we have there. From there now, we also have a loan repayment. Remember this one? And we said this loan repayment is starting in August. So it's going to affect August and September according to our table. So we are only going to put 850 for August and September. We go there and try to put that figure again. Right, we've got 850. So we are saying this first month there's nothing, but here we can put 850. And then here also 850. So this repayment will go on and on. But according to this question, we are only limited to these 3 months that we are given there. Right. We go to this question again to try to see the next instruction. Right, beneath that now, that's where we are having the instruction of saying 40% of sales are on credit. And remember, we calculated the proportion of cash sales is 60%, then credit is 40%. So we are going to start with cash sales. So we go to the question, and remember, cash sales proportion, we are saying 60% is here. That's our proportion for cash sales. So we're going to start with cash sales. So we just said 60% of the total estimated sales that we are given there. Of the estimated that we are given there. So we can just say here for our cash sales, calculation now of our cash sales. So for the first month, remember, the cash sales, we just say the estimated sales of that month and then times 0.6. Then we get the cash sales for that period. Then we recheck here to see what we have. So the months that we are concerned with here, remember our cash flow is starting from July. So we are going to use these figures: 26 for July, then August 28,000, then September 34,000. So that's what we are going to do there. And then we multiply those figures by 0.6. So we are going to say here, the first one is July. July, we are going to say 0.6, which is 60%, and then we multiply by 26,000. And then obviously, if you multiply that one for our cash sales, we are going to get 15,000. We are going to get 15,600. So this is for July. Then we have for August. August, we do the same thing, 0.6. In August, we are now here, 28,000. Then we multiply by 28,000. So if you multiply that one for August, you again get 16,800. This is August. Then we have got September. September, I do the same, 0.6. You multiply by for September, now we have 34,000. You multiply by 34,000. You multiply by 34,000, then you get 20,400. So you're going to get 20,400. Here you are now saying 20,400. So that's what we have there. So this is the figures that we are going to put in there for cash sales: 15,600, 16,800, 20,400. So we can go back to our other section and put those figures for cash sales. So the section for cash sales is there. It's here. We've got the cash sale here, so that's where we are going to put our figure there. Then we are saying the first month we got 15,600. 15,600. Then the second one for August is for 16,800. And the last one for September, it was 20,400. Right. So that's what we have. So we also have credit sales. So we go back again to there to see how we can calculate credit sales. We try to see there how we can calculate credit sales there. Right. We can create some space there so that we calculate now credit sales. Right. So for credit sales, we are also for credit sales now we are saying credit sales for this month will be paid after 30 days, which is the following month. So what we are going to do is the concerned months that we are preparing this cash flow statement is July, August, and September. It's starting here, July, August, and September. So it means for July, the credit sales that are going to be received in July are for the previous month, which is June. So if you come here, if you recheck the figures that we have there in terms of the month, for June, the credit sales for June are going to be received in July. So we are saying we are going to say 0.4 times 19,000 for credit sales for June. Then they will be received in July. So we are going to, in the cash flow, we put it under July, because cash flow is concerned on when actually the money was received. When actually the money was received. Cash flow statement is prepared on the cash basis. So when the cash was actually received or actually paid, that's when we record it. So that's what we are going to do, which is different from the income statement, which is prepared on the accrual basis. But basically, so what we are going to do here, we are going to start from June. Then for credit sales for June, July again will be received in August. We're going to record them in August. Then for August, we calculate the credit sales for August. Then they are going to be received in September. So that's the issue that we have there. So We can do that. And remember, the proportion that we have there is 40%. So we can come here now and say, this is now credit sales. And for credit sales, the one for July, we are going to use the figures for the previous month, which is 19,000 here. So we are going to say 0.4 times 19,000. And these are the ones that are coming from the previous month that are going to be received after 1 month in July. So if you say 0.4 times 19,000 there, you get 7,600. That's what we have there. Then we go to August. August, we are going to use the estimated sales for July. We have got 26,000. So we are going to say 0.4 times 26,000. And if you calculate that one, we're going to get 10,400. Then lastly, let's try to see what we have there. Lastly, we can check what we have there. Lastly, now we have September. For September, again, we are saying 0.4. We multiply by the sales for August. And for August, we have 28,000. So we multiply by 28,000. And then what we are going to get there, 11,200. So these are our credit sales, 7,600, 10,400, and 11,200. So you can just go there on the answer section and input them. For credit sales now, we are saying the first month we got 7,600. 7,600. The second month, we got 10,400. 10,400. And then we have got the last month, 11,200. And then that's what we have there. And obviously the next section is other receipts. So we're just going to go down to see what's next we have there in terms of the instructions that are given there. We go down. We also have we can also record that this one 6,500. It was recorded. It can be this is another receipt. You also qualified for a loan of 6,500, which was granted in July 2020. So in July, there's going to be a receipt of loan that is 6,500 of money that is going to be received for that loan. So we can go to July and put that one 6,500. So if you come here, we have got on other receipts, we have July, we have something there, 6,500 here. 6,500. So that's what we have there. Then we go back again to see what else can we put there. Right, so we go down to see the next instruction. So beneath that, you'd see that we also have an instruction of saying 10% on item 3, 10% of all purchases on credit, they pay 30 days later. And we are saying if our credit are 10%, it means our cash purchases are 90%. So what we are going to do there on these ones are going to be other payments. We can go to the total purchases that we are given there. We are given estimated purchases. So we can start with July. Let's start with cash purchases. Let's start with cash purchases, and let's try to listen to what the terms of the percentages that we are given in the question. We are given here as 10% as credit, so it means our cash is 90%. So we are going to use our 90% as our cash purchases. So for July, for cash purchases, we just go to the estimated for July. July is 16,000. So we are going to say 0.9, which is 90%. Then we multiply by 16,000. to get the figure for cash purchases. And obviously there you're going to get 14,000, 14,400. 14,400. So that's one. This one is for July. Then we go to the next one, which is August. August, remember, total estimated purchases is 18,500 for August. So it says 0.9 times 18,500 times 18,500. Then you get 16,650. Then you go the last one, which is September. For September also is the last one. So for September now we are saying 0.9. We multiply it by 22,000 total purchases. And if you multiply that one, let's try to multiply it, you get 19,800. So on the column for cash purchases, we are going to just to put these figures with 14,400, 16,700, 16,750. Then we've got 19,800. Then we go there on our other section and put those figures for cash purchases. Cash purchases here. So we are going to say 14,400 here. 14,400. Then we go to the next one. We got 16,650. Then we go to the next one. You are going to get 19,800. Right. That's what we have there. Then for credit purchases again, we go there to calculate it. Credit purchases. We can just create some space there so that we calculate credit purchases. Right. For credit purchases, remember we are using 10%. We are using 10%. So if you go again on the instruction of credit purchases, it's 10% of all purchases on credit. They pay 30 days later. So it's also going to be a month later. It's also going to be a month later. So what is for this month? The credit purchase will be paid next month. So that's what we have there. So if you look there, this one is for June. They are going to be paid in July. So for calculation for what is going to be paid in July, we're going to use the total for estimated purchases for June. Then we do the same thing for this one. They will be paid in the following month, which is August. Then for August, we use 18,500, but we pay them in what? September. So that's what we have there. So what we are going to do there, let's start by July. July is saying 10%, which is 0.1. We multiply it by 12,000. That is what is going to be July. Then we get 1,200. We do the same thing for August. August again, we are getting saying 0.1. Then we multiply by 16,000. For 16,000 there, that is August. And you are going to get 1,600 there. Then lastly we have this is September now. September. So September we are saying 0.1 again, and we are going to use this one this figure for August, which is 18,500. Then obviously we are going to get 1,850 there. So these are the figures that we have there. We have 1,200, 1,600, and 1,850. So we are going to put those ones as our credit purchases. So we have got their space that we have there. We have credit purchases. We've got 1,200 here. And then next, we are going to have 1,600. 1,600 Then next we have 1,850. Then that's what we have there. Then we go to see the next instruction. Person, you go down the instructions. Right, we were on purchases there, so we are on now item 4. Item 4 is saying Jabu will buy a second-hand delivery vehicle in July. The deposit will be 12,000. So it means this 12,000 is going to be paid in July. This 12,000 is going to be paid in July, and you are going to put it other payments. Other payments for July will be 12,000, and then the monthly payment thereafter will be 1,200 for 72 months. So it means for August and September, we are going to have this 1,200 as they are going to come after that. That is 1,200 for August and 1,200 for September. So that's what we are going to do there. And then beneath that also we have got you pay 5,000 for rates and tax in August. So in August again, we have another 5,000 that is going to be paid in August, specifically August only. So on payments, on other payments again, we have 5,000 this one, so we can go and adjust those ones. So we are here now. We can go to other payments. Right, on other payments, remember we are saying here we have 12,000 that is for July. That payment for 12,000 we are going to put it here. Then thereafter there are installments of 1,200. So here we have got 1,200. Remember there's also a 5,000 that is there that we said should come here of rates, and this 1,200 is also going to apply here. So that is what we have there. Then we go to try to check the other. So the last item that we have there is 6, which is saying you sell his old computer in August for 3,500. So what does it mean? It means this 3,500 is going to be received in August. So under receipts we are receiving, we are going to put again 3,500 in August. There on other receipts. So we can go there, check under other receipts, August, other receipts, August. We are seeing there's nothing there. We are supposed to put 3,500 here for that one. That is 3,500. Right. So that's what we have there in terms of the adjustments that we are supposed to make there. Right. So that's we have adjusted everything. Remember, we've gone all the further information that we give in item by item. So we can now calculate the totals. So here, first of all, you have to start with the first month. Start from the first month, and then you add the first total cash receipts that we have here. So you're going to add 8,500 plus 15,600 plus 7,600 plus this one, which is 6,500. So this one maybe to make it more visible, 6,500. Here we have got a 5 here, 6,500. So if we add this one plus this one plus this one plus this one, the total that you are supposed to get there, the total that you get there is 38,200. That's the total that you are supposed to get there. Then obviously we also want the total of payments, total cash payments here. This total cash payments here. We are going to start here, 14,400 plus 1,200 plus this one plus this one. Then you get total cash payments here, which is 37,450. 37,450. Then for the month-end balance now, we are saying this one here, 38,200. Then we subtract the total cash payments here. So basically we are saying total cash receipts minus total cash payments. So on total cash receipts, also take note that we also added the opening balance. opening balance, we include it under total cash receipts. So if it was a negative, we're going to start with a negative. We're going to say negative 8,500. If it was negative, then we add the other ones. That's what we are going to do. So this opening balance is included for the total that we get for total cash receipts. Then now we say total cash receipts minus total cash payment to get the balance for that month. So we come here, we are going to say 38,200 here, 38,200 minus 37,450 here. Then you get your answer here. You are going to put here. So if you subtract the two, you are going to get 750 as a positive. Right. So having that one now, this is going to be the opening balance for the next month. So here we are in July. So in August, opening balance 750. We are going to put it there at the beginning of the question, beginning of the answer section here, 750. So it's going to come again here. So here we say 750. Then to get the total cash receipts here, now we are adding 750 plus 16,800 plus 10,400 plus 3,500. Then we are going to get 31,450. Right. That's our total cash receipts. Then we need to also to find our total cash payments. So total cash payments now we are saying 16,650 plus 1,600 plus 9,850 plus 850 plus 1,200 plus 5,000. Then you get our total cash payments. So if you add that one, you get 35,150. 35,150. And obviously now we are saying now for the monthly balance, now we are saying total cash receipts minus total cash payments. That is 31,450 minus 35,150. Then you get 3,700. And this one is going to be a negative. Remember, the receipts are smaller than the payments there. This one is a negative, so you leave it in brackets. Right. This figure, total cash receipts, is smaller than this figure. So if you say this one minus this one, you're going to get a negative E. So you show by brackets that this is a negative figure. So this is going to be our opening again for the following month. This one, 3,700, the negative 3,700. So we go up there now to put it again there. It's our negative 3,700. So we can just say in brackets 3,700 to show it's a negative. Right. So to get this figure for receipt, total receipts here, we are going to say negative 3,700 plus 20,400 plus 11,200. So if you do that, they are going to get 27,900. So here is 27,900. Right. So we go down again to check what we have. So we are now adding again payments here. We are saying 19,800 plus 1,850 plus 9,850 plus 850 plus the last one, which is 1,200. Then you get 33,550. 33,550. Then we are saying receipts minus payments. So we are saying 27,900 minus 33,550. You're also going to get a negative there, which is 5,650. And it's a negative figure. So negative meaning the business is in a cash problem again. This is a liquidity problem problem that is there in the business. So that is what we have, guys, in terms of the question that we had for November 2022. Hope this has assisted you for your preparations for the final exams. Those who haven't subscribed, please subscribe and share. We are still coming for the preparation for our exams. Stay tuned for more videos. Thank you for listening. With that, I'm signing out.